Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million in annual revenue and beyond. And in support of that mission, we do these free mentoring roundtables week after week after week. And this is the 495th session of our program. We use this format of mentoring in the premium program as well. So we do a lot of roundtable mentoring. Every single session of these roundtables, the free public ones, are available. Everything is recorded. The free ones are available on our YouTube channel. So if you go to YouTube, go to 1M1M roundtables, you'll find all the recordings, and they're very good learning material. On Twitter, we're at 1M1M, and that's Romana. Hashtag 1M1M if you're live tweeting today. This is a roundtable, not a broadcast, so please do participate. I will open up the call-in line later on in the program after we have finished the scheduled programming. We will start today's conversation with Sonali Vijayavargiya, founder and managing partner of Augment Ventures. Sonali, welcome to the show.
Thank you. Thank you for having me.
So let's get acquainted. Let's get you introduced to our audience. Tell us a bit about your background as well as what you're doing with Augment Ventures. What is the positioning and what is your investment thesis?
Sure, for sure. So a quick introduction to myself and to the firm. So I grew up in India and went to school there and worked with large institutions in India and started an investment banking company there with a bunch of my friends and took India-based technology companies to NASDAQ and Bombay Stock Exchange. So did that for a while, and that was a lot of fun. And moved to the U.S. in 2001 and worked with a number of local entrepreneurs in the Ann Arbor area, Midwest area particularly. A tremendous amount of technology and research was going on in, these universities, like University of Michigan, State universities, what's happening in Chicago and other areas. So I ended up spending some time mentoring and working with entrepreneurs to take their companies for financing or finding customers. And in 2011, started Augment Ventures. So the thesis of the fund is really investing in enterprise software, smart hardware, technology companies, really early stage. We are generally the first professional money that is in the company. So, we are working with young teams where the teams are still getting formed, and there is some customer engagement going on with the company. And what we are trying to do is really see how these solutions can have a massive impact on efficiency and sustainability and health and wellness, how we can use technology to not only impact just the North American envelope, but actually take the service all across the world, right? So people can experience the solutions or these products in the same way that people who are building these products are from the land here.
How big is the fund?
The fund is we have about $20 million under management, and we typically make investments ranging from $250 to $500K to start off, and then stick with the company as long as they are in various rounds of funding.
Okay.
The way we work is that we have a dedicated fund, and then we have a pledge portion of the fund where we are able to participate and continue to fund our company as they grow forward.
Okay. And what is the geographical focus of the fund?
So we are, at this point, investing all over North America, but focus areas for us are the Midwest, Michigan and Greater Midwest area, as well as Bay Area. We have a number of our portfolio companies that are in that region as well. We have a little bit interest and engagement in the New York and Boston area, but primarily I would say it is Midwest and Bay Area.
Are you based in Michigan? Is that why?
Yes. Yeah.
Okay.
We're based in Ann Arbor, Michigan. Yes.
Got it. And when you say you're focused on enterprise technologies, does that mean your primary business model is a software as a service business model?
Not a really service business model. As you see, most of the solutions that in today's world or products that we are using, they are trying to eke out all kinds of productivity tools and solutions for an enterprise. So one of our companies that we invested in, which is a Michigan Ann Arbor-based company, is a company called LlamaSoft. And it is in supply chain. It's a supply chain product which helps you optimize and network and visualize your supply chain more optimally. So they have a SaaS product which are deployed all over the world. Fortune 500 companies are using that product. So when we talk about enterprise software companies, we are really talking about different kinds of products, whether it be in security, whether it be in supply chain.
I'm asking is business model-wise, enterprise software today, for the large percentage of the companies out there are selling their software and software as a service as a subscription software business model.
Yeah.
So that's your business model.
Exactly. So exactly. Most of our companies have that business model. They have a subscription business model. And then, I think when a lot of times, particularly how I see, people are investing, of course, they value the recurring model, which is rightfully done. But oftentimes, there's a lot of ding if there is even any part of the managed service part. But somehow I feel that, products don't walk by themselves, and you have to get engagement. So some of the investors, they are extremely pure play, they just, of course there's some percentages and things like that. If your 90% of your revenue is coming from managed services, then it's a different case. But some element of managed service is a good in a company, because that shows that you understand how you will support your clients and have a long-term value in the product that you're selling. So, some investors that I have engaged with or tried to collaborate on deals, and they say, if there's managed part of the service, then we are just not interested, because that's a 1X for us.
I think her line went dead. Right?
Can you hear me? I can hear you.
Yes, now we can hear you. Go ahead.
Sorry.
So let me use that understanding of your investment thesis to ask the question. To write a $250K or a $500K check, what do you want to see by way of proof point in the company? Do you want to see a certain MRR level, or what? How do you decide what threshold you want to engage in?
Yeah, so I think oftentimes one of the questions is that VC engagement or professional engagement is getting to a later and later stage. That is very, very true and obvious. So as I mentioned earlier on, in most of the cases, we are not taking discovery risk. We are taking execution and growth risk, expansion risk. That's what we are doing. So when we engage with a particular company or any kind of an opportunity, like most investors, we are really looking for that massive market, because, as you know, cost of capital for VCs are very high, and we have to give returns to our investors. So what we are looking for is that massive market, team cohesion, and we are looking for customer engagement. So at that level, we don't have a very strict bar that, hey, they need to have 1 million in ARR or something of that sort. But what we are really looking for is that how is this technology or this product or this service or whatever that might be that we are investigating as an investment, how can it make that impact and really create that value? So I think for us, really the market opportunity and the team cohesion plays a fair amount of weightage. I would almost put it as 70% of the weightage, and the third component of that would be customer engagement. And we spend a lot of time, even if they haven't signed on to a customer as a paying customer, and they're engaged with them, whether in a pilot form or trying to engage them as a pilot. We spend a fair amount of time talking to customers and discovering customers for whatever things that's exciting us or that we like, So that's how we make an investment.
Okay. And talk about a few of your investments, and particularly walk us through your thinking about when you met them, how did you meet them, what was it that they had that made you think that, yes, we would like to write the check?
Right. So, I can, one of our very successful companies, as I mentioned to you, is the supply chain company, Lamasoft, which was in Ann Arbor. So, that was part of our ecosystem. That company was there. They had on-premise product, and they were pivoting to a SaaS model. And they have been, duct taping their way around, and they decided to make the pivot and really grow the company. We would like to raise a professional round. So I knew them from the community that I am in. Mm-hmm. So while doing diligence, we engaged with Nike and some other groups to make the investment. So Augment orchestrated that investment with Nike Ventures, and we exited. We got a partial exit of that deal for $360 million, and we're able to give great returns and great outcomes to investors and founders. So the thesis of that investment in particular was how this solution is going to impact profitability, visibility, as well as sustainability in the supply chain area, right? I mean, it's a massive, massive market, and now the company is tracking almost $100 million in revenue run rate. So the engagement was from the local community.
Just a second. Was Nike the key customer? Is that why you went and Nike Ventures? Yes, okay.
Yes. Yeah. So we were actually doing diligence, so the company came to us and said that, hey, Nike is our customer. And we said, oh, really? Let's go and chat with them. So we were actually talking on the product side, like, hey, how are you using the solution? What's your plans for growing and making sure the solution is spread all across Nike? And they realized the potential of that, and actually Nike's entire supply chain excellence is based on the backbone of Lamasoft software. So, it's just like our inquiry into the customer actually led them to be an investor in the company, which is kind of interesting. So it was good for the company. It was good for us. We got a lot of validation for a young company, that is trying to get this product out. So that was exciting for us. So that's the company that came out of our local ecosystem where we knew the people. Another example that I would share with you is a company called Flume. It's in the water space, and this came out of Cal Poly. And this was brought to us by one of our champions and our co-investors from the Bay Area. And they say, hey, really hustler group of students and founders, and you should chat with them. So it's a very elegant solution for leak detection and water management. Now, I'm sure a lot of people have spent time trying to understand water and how it impacts and how we are not truly valuing, the cost of water. So I was always excited, and I've tried to play in that space for a long time, but haven't found the right solution to get behind. And this is a great product which not only met direct consumer needs, but also met the needs of, around more than 50,000 water utilities that are there. So there's a simple device that straps onto the water meter, and then the data is monetized both on the consumer side as well as on the water utility side. So again, the draw to that particular deal was it's a billion-dollar opportunity, not only in North America, but can be easily transported all over the world. The team was really passionate, was really driven, and understood also how to, it was a young team, but they understood how to develop, experience and talent within their startup. So, that gives us a lot of confidence on that young team to be part of them. And the third thing was we just thought that it has multiple layers of monetization, whether it be for utility, whether it be for insurance, and whether it be for home detection. So it was a massive market. So that got us really excited to participate in that deal as well.
Okay, very good. And you mentioned something about getting a partial exit. So a lot of small funds are doing that. They're kind of exiting into later rounds. Is that something you're doing on a regular basis? Is that part of your investment thesis for the fund?
Yes. I mean, I think, there comes a time where you think that, we got like 15 times return on our investment in LlamaSoft. And, it was, we felt like strategically it was, and also depending on the life of, funds have their cycle, their life, and keeping all of those things in mind, we thought that as LlamaSoft continues to grow, we would definitely like to take benefit of the upside, but maybe it is a good time to take some capital off and give it to our investors. So that equation, changes based on the life cycle of the fund. So it's not a set, time or a formula, but it depends upon at what stage the exit appears and at what stage the fund is in.
Talk about the Michigan ecosystem a little bit. What's happening? What are you seeing? What's been the trajectory in the last decade? And, what are the key drivers, key trends, etc.?
Yeah, I think, when I actually, it's been a really interesting transformation, I would say, of the ecosystem. So I moved from Mumbai, India in 2001 to Ann Arbor, Michigan, which was interesting given, the bustling city of Mumbai, and I was just looking for where are the people here. So it was an interesting time for me. And I really enjoyed working with startups, back in India, and I wanted to engage in the ecosystem. So I went around looking. I said, well, there are, it's obvious, like there are these massive universities. Where is the tech transfer? There has to be something happening. And, I had to go some far off campus place to find the tech transfer. Fast forward now, tech transfer at University of Michigan and MSU and Wayne State, they have done such a tremendous job of, commercializing technology that is coming. There's more than 10 billion going into research in this geography, right? And so the awareness that, hey, we can drive value and actually impact outcomes by commercializing the technology is immense. So, on the mobility side, on the healthcare side, on software side, I think all facets have been greatly impacted in this process. We had Duo Security, another Ann Arbor startup, which was acquired by Cisco for over $2 billion. So there have been a couple of unicorns as well in the area. And the other part is that, these entrepreneurs have stayed in the region and have reinvested into new startups. So I think the engine has really started and people are engaging in with that. Also, the other part of it is that there is an increasing awareness of teams and solutions that are coming out of different regions other than just the Bay Area or New York, Boston area, or Austin hub or whatever other hubs are there. And people are willing to get on a plane and meet this, not now, but meet with these teams. And another thing that has happened is there is a ecosystem of local investors have emerged, which gives confidence to partner with, like, so for Nike, having Augment here in Ann Arbor facilitated that investment. I mean, I think Nike by themselves would have thought, like, in Ann Arbor, like, Goldman Sachs, who later on became an investor in Lamasoft as well. So there is an engagement from in larger investors with local partnerships. So I think that's how the model here is evolving. And additionally, there's lots of quasi, development programs that the state government or the universities or local counties and angel groups that have formed here, they are facilitating, that, seed to A kind of time period where people are understanding how this entrepreneurship and startup world and how these companies work. So there is a lot of education as well that has gone into informing these communities. So, I feel that now it would be fair to say that there's a sort of a hub forming.
And is most of the activity in Michigan out of Ann Arbor?
Ann Arbor is one of the strong bases here, but there is Lansing area. There are startups that is because that's closer to MSU. That's where a number of startups are there. There is also Grand Rapids area where there's a number of angel groups and startup activities and accelerators there. Of course, there is Detroit for sure, where there is a ton of activity to draw talent into the city and have startups and fundings and things like that. There is Traverse City as well. So there are a number of areas in Michigan where these activities are happening. So the way Augment works is, of course, we are part of this ecosystem, but when we reach out to entrepreneurs outside our local geography, oftentimes they are looking for relationships or connections to this area. So among the various portfolio companies that we have in Bay Area, almost all of them are engaged with large corporations or talent or development house or whatever in this greater Midwest geography. So the way we see is that we have a symbiotic relationship. So we are really going after a solution or a product or a company, whatever that might be, that resonates with us, and we think that it's going to make an impact. And then we try to collaborate and work with our syndicate partners that we've been working for last 10 odd years, whether it be TPG or Goldman Sachs or Capricorn or DCM or whoever that might be. So we have over the time built relationships both with corporate venture funds as well as large private venture funds as well. So that is what we bring to our group of portfolio companies, as well as these customer introductions where they are trying to make. I think that's the biggest thing a venture fund can do, or any investment that you make in a portfolio, is expand their access to customers.
So does that mean that your portfolio weighs heavily in the manufacturing sector, the automotive sector?
No, not really. We do have an investment in an automotive sector. It's a smart hardware device that straps onto your. It's in tire pressure monitoring. It's out of Bay Area. Actually, it's kind of funny. The only automotive company that we have invested in is out of Bay Area, which is interesting. But they did benefit from our relationships here, to make introduction to customers. So I think, like I said, it would be easy to say that we are sector agnostic. We are really looking for the right opportunity. There's another one that we are exploring at this point, which is in ag tech, where the play is how do we, increase output and yield by 50% and reduce the environmental impact by 50%. That's the USDA guideline for ag tech. And how does one do that? What kind of a data, what kind of information is going to make you achieve that? and what's the technology behind that, right? How do you engage with them? You're talking about carbon sequestration in farmland. How does that happen? So I think, our vision of our fund is pretty impactful. We are really trying to see that engage with groups and technologies that will have a massive impact. That gets us excited, and we leave no stone unturned to make a portfolio company successful.
Very good. That gives us a good sense of what you're doing, and maybe we'll start doing some stuff together.
Yeah, for sure.
Thank you, Sonali.
Take care. Bye now.
Bye-bye. All right, folks, we are going to switch to the entrepreneur pitch segment of today's session. Let me set some expectations here. This is a safe working session. You don't need to be defensive. You don't need to be scared or anything or nervous or, we are completely on your side. We'll be working together, brainstorming about your strategy. That's the, beginning and end of this session. And if you disagree with the feedback you get today, that's fine. It's your venture. You will make your decisions. Just be aware of one thing, that not all businesses can raise money. Not all businesses should raise money. And raising money doesn't necessarily guarantee success. Our philosophy is entrepreneurship equals customers, revenues, and profits. Financing is optional. Exit is optional. So we will stick to that and give you advice accordingly. So we will not just, if we consider that what you're presenting is not fundable or not fundable yet, we're not going to tell you that you shouldn't pursue the venture. There are very rare cases where I would say you shouldn't pursue the venture or you're going to fail or any of that. I never say that. You will have to let the market decide. And just on the fundability equation, just know that things that are fundable tend to always need to be very high velocity growth and have to have the potential to go from 0 to 100 million in 5 to 7 years. All right, let's start with Sousthav Chakrabarty. Simply is the company. Sousthav, please come and talk about what you're doing. Unmute your line.
Thank you, Ramana. Okay, so let's get started. Simply is a tech-enabled micro savings platform for the low income and for the contractors segment in India. Next slide, please. So what Simply does is it helps staffing and contracting companies inculcate a savings behavior, especially after COVID-19. What has happened is a lot of low income and the odd job laborers market in India has completely shrunk. People are out of jobs. They're getting salary cuts. They're not getting their payments on time. So a whole section of society, their savings have absolutely been, wiped out. So all of these people have been left battered and bruised. And Simply is an initiative to help them recover some of their savings in a very granular fashion by enabling them to save as low as 1 rupee every time they transact, whether it's a delivery, whether it's, let's say, serving someone, whether it's a merchant where there is a swipe on their POS machine. Every time there's a transaction, we will help them save as low as 1 rupee. Next slide, please. So the target market is contract workers, blue-collar workers, merchants, and small business owners. What we find for these people is they generally have no control on their expenses. They're extremely ad hoc. There's absolutely no plans, that they have made in terms of their money. Their awareness is very low. Their knowledge levels are very low, and they absolutely have no emergency funds, which is why once COVID hit in this, current environment, they've been left without a single penny. So they have family emergencies, they've got medical emergencies, they got stranded in these larger cities trying to head back to their, native, wherever they came from, and they got stranded because they didn't have any kind of money to pay for even a bus ticket or a train ticket. So absolutely no emergency funds. However, they are aspirational because since they work in the larger cities, so they are seeing what others, aspire. They want to buy a smartphone. They want to go for, buy expensive gifts for their family when they head back to their native. And most importantly, this market, which is about 400 million people in India, are absolutely underserved. Next slide, please. So I'll take you through the three brief problems. This is a survey that we did in collaboration with Pay Nearby. The survey was concluded this month. We find that 70% of the low-income segment do not have a formal savings mechanism, and we're trying to address that by giving them a literacy-driven approach, savings which is directly taken from their earnings, and a dynamic savings platform. Next slide, please. The second problem that we found is that 47% of them said that they needed flexibility. Flexibility basically means when they have a good day, they should be able to save more. When they have not such a good day, they should be able to avoid or pause their savings for that day. And when they really have a bad day, they should be able to access what they've already set aside. So that's what we are actually enabling for them through Simply. Next slide, please. The third thing we found is that 55% of India, they wanted to save more to manage a COVID-like situation, because right now, not a single person has a clue as to when things will go back to normal, or even if they will go back to what they were, pre-COVID. So what they want to do is be able to set aside small amounts of money, furlough them so that at the time of emergency, they can quickly access all this money. Next slide, please. And the fourth thing is that they wanted operational access. They find paperwork to be very tedious. And when they really need the money, and that's what an emergency fund is supposed to be, it should be available for them right at that point in time. But they find that the access to their own money is often delayed, sometimes even by weeks or even months. Next slide, please. So these are two of the companies that we're currently working with. For instance, with Uber, they had to say that this is probably one of the best ways to motivate drivers to save by giving them a certain amount of savings at the end of each trip. The other company that we're working with is Solve, which is a Standard Chartered UK venture in India. It's an ecosystem for very, very small scale merchants. And they said that pause-based savings, which is a point of sale-based savings, has never been done in India. And if it is executed properly, it will essentially fundamentally change the way these business owners save money. Next slide, please. So this is our TAM, SAM, and SOM. So in the next 3 years, we're looking to cover about 5 million households, which is about 5% of the market. And through them, we should be able to cover almost $1.3 billion in terms of savings. Next slide, please. The biggest challenge that we face as a business is our entire go-to-market is B2B2C. So we do not have the budget or the mindset to go and acquire these users one by one, because then our customer acquisition cost would be alarmingly high. And since our revenue is a tiny marginal fraction on the amount of money that they invest, therefore it's not financially feasible. And we're definitely not a company that wants to throw a lot of money on marketing and get users, but we want to be, unit economic positive from day one. So therefore, it's very difficult for us to go into a B2C environment. So what we've done is, like you saw before, we've implemented with Uber, we've implemented with Solve, and we have several other. In fact, we're discussing with Amazon, we're discussing with a lot of these large e-commerce companies in India to enable this for their delivery partners. The biggest challenge that we have right now is how do I get a business interested in the welfare of their employees, especially at a time when their own revenues are hurting. Because a lot of, as you know, I'm sure it's no different in the US, a lot of startups are headed towards a shutdown. They're running out of their runways. New investor interest is waning. It's gradually going to take time before it comes back. So how do we promote this in front of businesses where they are themselves, by themselves, they're hurting, but they, of course, align with the thought process.
What is your business model? How are you making money? How is Simply making money?
So we make money on the investments. When the end consumer invests a certain amount of money with us, we make a very, very tiny fraction out of that as management fees, which we get directly compensated by the end product manufacturer. So for instance, if you buy gold through our platform, which you can do for an amount of as low as 1 rupee, every time you buy gold, I make a percent out of that. For instance, if you want to buy mutual funds through our platform, every time you buy some funds, I make some money. So like this, there are about 5 to 6 different products that we have on our platform, and every time you transact, I make a small amount of money.
So what kind of numbers do you need to do? Like how much money do you have to have under management for you to be able to become viable?
So not much. In fact, what we project is that by the time we get to about 60,000 to 70,000 users, we would have sufficient amount of money to run our operations with a cash positive in a cash positive territory.
So
Uber, for instance,
60,000 users investing how much? What is your assumption?
So my assumption is an average of 1,000 rupees per month.
Saving and 1,000 rupees per month. The segment you're going after can do that, do you think?
So the challenge what we found based on our surveys is that if we ask any of these people to save 1,000 rupees at the end of the month, then they will not be able to do it. But the way we've approached this is through the micro savings segment, which is when we talk to an Uber driver and we tell him every time you end your trip, you save, let's say, 5 rupees per trip. Now then it's same 1,000 rupees.
How much does an Uber driver make per month in India?
Roughly between 30,000 to 35,000. That was pre-COVID. Post-COVID, right now they are hitting about 15 to 18,000 per month.
I see.
And the thing here is, it's not about them trying to save this 1,000. They anyways need to save this 1,000, because if they do not do that, they will not have enough money at the end of the month to pay for their EMI on the vehicle. So the vehicle will end up getting repossessed. So it's not that we're trying to promote them to save money because it's the right thing to do. It's because it's necessary for their sustainability, because otherwise their vehicle gets repossessed by the bank, which they cannot afford.
So, but if every month they save 1,000 and the 1,000 gets consumed there, they don't spend any of that money buying your mutual fund or gold or any of that. So how do you make money of that?
Okay. So the idea is, on a mutual fund, we get money on the total amount of money that's under management, right? And it's calculated by the number of days. So based on our mathematics, what we find is that even if someone invests with us on a daily basis and that money kind of accumulates throughout the month, and even if it gets wiped out at the end of the month, there's a significant number of revenue that still remains with us. That's number one. Number two, the assumption is that once people start saving efficiently and seamlessly, and especially, very, very with a lot of, frictionless kind of architecture, eventually they will come around to making other types of investments also through our platform. For instance, they'll end up buying gold for their, daughter or for their wife. They'll end up planning for their longer term objectives. They may be wanting to pre-close their loan. So they may want to set aside some money for that. So there will be about 80% of the money which will get wiped out at the end of the month. But there will also be that 20% which will remain for longer term objectives. So that offers us a higher revenue.
So how many Uber drivers are there in India?
About 500,000.
Okay. Now, this deal that you're doing with Uber, will it get you directly to the 500,000 once you finish your proof of concept and everything?
Yes.
Is that an automatic deployment?
Yes, because the proof of concept is with about 72,000 drivers. We are gradually extending to cover all 72,000. Again, bulk of it is not happening right now because about 50% of these drivers are not plying on the road. So as and when the economy begins opening up, and as and when these drivers start, driving around again, we will cover the POC of those 72,000 drivers, and then eventually Uber will roll it out across their 500,000 fleet. But Uber is just one company. So we have a lot of other companies. Many of the e-commerce companies which are doing deliveries, we are also signing them up, because in that case, deliveries have actually gone through the roof, especially because of lockdowns. So that's a business which is booming.
For example, if you got Amazon as a client, how many deliveries does how many delivery personnel does Amazon have?
So Amazon currently has about 240,000 delivery personnel in India.
Okay.
There are about 15-20 large e-commerce companies in India, all of them having anywhere between 70,000 to about 250,000 delivery personnel.
So to get to the 5 million households that you're targeting, how many companies do you need to sell to and bring on board to get to that number? It's probably not a very large number of companies, like 50 companies.
So if we get, of course, the largest of the large companies, then it's not a large number. However, if we look at an average deployment of about, say, 10,000 corporates, at a time, which is more likely, because it's highly unlikely that we will get all the large companies, to work with us. So if we look at an average of about 10,000, then we're still looking at about 500 corporates.
Yeah, I actually think that the business will play out differently. It will play out more like you will get a small number of large ones who want to do this, and and that's actually good news for you because the sales cycle and everything can be concentrated. It will be less expensive to acquire customers, especially if it's an automatic deployment into all their, as part of their software, basically, if they just have
Absolutely. Yeah,
So,
we're looking to integrate within their app itself.
Why is reaching out to the right person in a large company a problem? You must have identified what kind of people are in charge of this decision. It's an HR decision, isn't it?
It's different for different companies, and that has been our challenge. So we found companies where they are kind of shifting their responsibility from HR to finance. Then there are other companies which are shifting from finance to operations. Then there are companies which are shifting from operations to senior management, and the senior management says this is really not my KRA, so you'll have to talk to someone down below. And they're kind of playing pass the parcel, and we are kind of getting knocked around within the organization's internal structure. And because this has never been attempted for these large companies before, so there's no clear definition of a KRA. Even within HR, for instance, there's a tug of war between, say, compensation and benefits team and the employee wellness team. Because in certain companies, the employee wellness team wants to take credit for this and they want to spearhead this. But in order to do this, of course, this requires a change on the payroll. So that's a decision by the Comp and Ben. And in some organizations, Comp and Ben, want to take point on this, much to the chagrin of the employee benefits. So it's kind of, we're getting knocked around within the company. And it's very difficult for us to figure out in which company, who's that right target person that we should talk to, make them, co-stake owner so that they can also get the credit of deploying this for the whole organization.
How about starting with the CEO?
That's also another approach. So we've tried that with some companies. Unfortunately, with the environment being what it is right now, the CEOs are exceptionally busy. In some companies, it has worked really well. Like, for instance, in Uber, it worked really well. But in many of the other companies, the CEOs are taking a lot of time to respond back to us.
Another possibility, another thing that you could explore is trying to work with marketing, the head of marketing, CMO, or stuff like that, because that's, this is something that they could market as right now there's a lot of appetite in India for, CSR, and this could be marketed as a CSR initiative.
Absolutely.
So okay. You could try the CMO and the CSR team also. But yeah, it's interesting. I think what you're doing is interesting. If I haven't looked at the numbers, so I'll take your word for it that your numbers and the unit economics work out. But what you're doing is definitely interesting.
Thank you very much, Ramana.
You're welcome. All right, Doug, you're next.
Hi there.
Hello.
Thanks for having me. So I'm Doug Applegate, and I'm the founder of 1Fan, and I looked at a gap in the fan experience with sports and events all around through my own experiences and just seeing and hearing from others that attending your favorite sport or event, the gaps and challenges that could have been improved and guided or even eliminated altogether. So I came up with this idea to kind of pursue and feel that there, through some of my research and through starting to build out everything, that there is a gap and there isn't necessarily a solution out there. There's a part and parcel that there are out there in existence, and I'll go over a few of those. But that's who I am and what I'm here to talk about today. So next slide. So 1Fan is proposing to be the ultimate fan experience. Next slide, please. So before fans or attendees even arrive to your venue or to the event, they're going through a variety of routines or researching and questions, even for themselves, even if they've been there 100 times or this is their first time to your venue or to your event. And they all center around a lot of the same basics that we believe to be basics, but are all part of the experience. And that's before they even walk into the stadium. So they're pulling up multiple different apps and websites to use to be able to get out of their door to your door or to your gates as a stadium or even as a venue. And what we're doing as fans, we're looking at the traffic, where's the easiest or fastest route. We're trying to figure out parking. Some of us generally are just driving around till we find a spot. If it's $30 to park or free or wherever that might be, or if it's a parking garage versus a generic business lot that somebody's using on the weekends. Concessions and then restrooms once you're in the stadium. Beyond just ticketing and finding your seats, the other aspects are where's the restroom, what's the line like, where's the concession stand, where's the hot dog vendors, where's the popcorn and cotton candy vendors coming through the stands. So all these aspects of the door-to-door experience, and then how this can improve as a fan. I found that there's frustrations and gaps in that. We as fans, next slide please. We as fans are really struggling, and even now with COVID kind of putting a bump in live events, but eventually as sports comes back together, some of us have anxiety or social panics in regards to what the event is like, where the venue is, how big is the crowd, am I going to miss the big game, or am I going to miss a play or a song from my favorite team or artist? And so the fan experience really involves around more than just getting the ticket and sitting there in the seats. A lot of venues and events have made a lot of money and definitely want people in the lobbies spending money at the gift shop and concessions and so forth. And with OneFan, the technology around this is to be able to do a lot of that to your seat, similar to a DoorDash or something that might go pick up the food for you, or even an express checkout where you can order ahead and go to the express line and pick up your food or your gift shop gear without having to wait in line or go peruse and stand in line or go walk through the lobbies, especially with social distancing in mind. This is another aspect where it can help give a fan a guided experience. And beyond that, the idea of knowing where people are and how long the line is going to be helpful in making your decisions as to when you get up or if you get up at all, and so that you don't have to miss a moment. And that
so,
fan.
Doug, this is an app that you're selling to venues, or what is the business model?
So the business model has a dual or a triple market opportunity. There's definitely the fan or attendee facing app feature where there is a setup for a freemium model. So there is subscription to a VIP or a premium related content or access to certain features beyond maybe the basics. And then the sell to the venue or to the team, for instance, if it's professional sports or local or college related venues and sports where they have the building that they're consistently hosting events, maybe the same events, and it's an NFL team that's every Sunday is hosting a game. They're going to have repeat fans or repeat attendees, and there's others that are going to do it for that same stadium is used for other events when there's an away game or when it's out of season. So there's the dual market where you're able to sell this app that can help those companies or those marketing firms or those sales teams to know with real data analytics in regards to where people are, what's the traffic flow, what are they spending money on, and also then how to gauge and guide that for future reference or future changes that you might want to make as you continue to compare and contrast data and market intel. And then I think that where there's a potential third opportunity is the sponsors.
Doug, let's stay there for a moment. Recruiting clients, the consumer-facing recruiting fans, so to speak, for your app, for your app, 1By1 is going to be very tedious.
Yes.
My instinct would be to sell to venues and have the venues kind of make it the app for that venue, and then the fans download it because of that venue. And I think you can work it out how you're going to do it from a product design point of view. That, let's say one venue, has the fans download the app. You could either make it venue by venue. I mean, if let's say people live in San Francisco and they want to, there's one venue really where all the games are happening. If people are going to so I think my guess is I would make it a subscription app for venues by number of users.
Okay.
Instead of trying to get fans to pay for this.
Absolutely. That actually was one of my, in conversations with a few people that I've been in advisement with, that's one of the angles that I'm definitely interested in pursuing. The other angle would be potentially through a lot of the online ticketing platforms that are out there and being able to utilize that as a way to push the app out through that ticketing app or that ticketing. Once they buy a ticket, that the fan then gets their emails or their push notifications, and that's another way to deliver that, because you're absolutely right. Going one-to-one is going to be a hard way to scale. So there is, again, looking at some of the competition or similar areas that people are trying to address aspects of game day experiences or parking or navigation and wayfinding and so forth. There's a few out there, but again, the idea around One Fan would also be to have this not necessarily as an omni-channel, but at least one that comprises a really compact part of the total experience that is beyond just using.
Are any of these competitors selling to the venue as a full event experience app?
There are a few that are selling it as a full experience, but their focus mainly has been on the media and content side. So, video content, AR content, or aspects of things. That's been the majority of where the fan experience apps that are out there.
Then you have a gap that you can go into.
Correct. The closest that I've seen to what I've put together with One Fan has been Venue Next. They seem to be the one that's probably the closest in relation to helping fans find their seats and guide them to concession stands and so forth. But there's still some gaps there. But there's been a few in the last couple of years that have been able to achieve some funding and have gotten some aspects of the market that I'm pursuing, but in very segmented. So the idea for me around this would be potentially to do something similar where it may mean starting smaller into one of those or two of those segments rather than starting with trying to take a large chunk. But ideally, that's where what I'm building on right now, especially with places like, I don't know, you may be familiar with the AT&T Stadium in Dallas, Texas, where they are building a 5G center all around within that to make that basically a testing and proving ground for AT&T. So a lot of that kind of spawned a lot of the ideas when I was reading up on what they're doing there, because with 5G, the ability to have faster speeds and allow more users and bandwidth, and incorporating that by being built on the cloud, that way we can deploy things faster and have a lot more real-time data coming to and from. That's the idea of building this in advance for that too.
Okay, good. Good. So you need anchor customers, and the main input I would have is try to not go B2C, try to build this as a B2B business, B2B SaaS business, and I think you would have more success. I don't know what is the business model of Venue Next. You should investigate what is the business model, what kind of adoption are they getting, and so forth, because that is the one that you're going to be compared against if you're trying to raise money for that.
I have been trying to find that information out actually, because I've been able to go on the Apple Store or Google Play, and you can download their apps specifically to where the venues they have worked with, but I can't find anything. It looks like it's a free app to use, but I haven't been able to explore the app far enough into see if there is some sort of premium model to it. So they may just be doing the straight to B2B model like you propose as well.
I see. Okay. All right. Very good. Good luck.
Thank you.
Maureen, you said there's a third entrepreneur who wants to pitch. Are you uploading the slides? I'm going to let you do that while I'm going to answer a few questions, and they're uploaded in the drop-down. I don't see it. There's no slide in the drop-down except for these slides. I don't see anything in the drop-down. It's not showing, Maureen. Kashika Arora is asking, I want to know if an entrepreneur has a business idea, how to make a pitch. Kashika, before you pitch, I would suggest that you do some work in trying to understand whether the idea has legs or not. So I would suggest you go to, I'm going to explain a bit more about how to use the 1 million by 1 million program. Just hang on, and I will, explain to you while I'm doing that what would apply to your situation, okay? I'm not sure where I'm supposed to go, Maureen. I'm going to the drop-down. The drop-down doesn't have it. Oh, it is uploading. I see. So, Sebastian, hang on for a second. We'll do your slides in a little bit. Let me go through the 1M by 1M segment, and I will come back to your presentation after that. Folks, if you like what we're doing here, refer 1 million by 1 million to your friends and colleagues who are serious entrepreneurs looking for help. As you can see, our approach is to give very candid, constructive feedback. It can contradict your current assumptions, and our goal is to basically help you move forward. That's pretty much it. And we strategize, and if necessary, we'll contradict you as well. And you have to be open to that. Everything resource-wise is at 1mby1m.com. There's a blog that you should follow, and you will learn a lot just by following the blog. The Entrepreneur Journeys book series is available on Amazon as digital books, all of them. You can get them very easily, very reasonably priced. There are 12 volumes, and these books you can, double-click down into specific topics as well. So these are case study-based books, 12 to 16 case studies each, and you'll learn a lot from them. These roundtables happen every week. So over 150,000 people have attended these roundtables. We are coming up to 500 roundtables this fall. So it's been a very long-standing program in the entrepreneurship ecosystem of the world. Our full acceleration program is 1M by 1M Premium. And you can get, through that, you can get extensive methodology guidance. You get access to a full digital curriculum. We help you with business development. And we have strategy consulting in similar formats as these roundtables, but they are private members-only roundtables. And we also help you with financing and media relations. So, Kashika, this is what you should do. Go to the 1M by 1M self-assessment on our website. It's a free tool which you should use. It's a set of questions that investors would ask you to answer. You should take your idea and try to answer these questions about that idea and see if you can answer these questions. If you get stuck on methodology points, like if you're not understanding the terminology, you're not really understanding what's happening in the, when you encounter a question, like bottom-up TAM, you may not understand it, you may not know what that is. If that's the case, you can go to 1M by 1M Basic, which is our curriculum-only program. And for $99 a month, you can just study the curriculum as much as you need to. There are many hundred hours of curriculum in there. My recommendation would be if you can put in 50 to 100 hours in studying the core curriculum, including the case studies, that is going to be a massively productive way for you to bridge a lot of the methodology gaps that early stage, first time entrepreneurs usually have. In any case, the website is very well, fleshed out. You can go find out about the premium program, the basic program, what to expect, video FAQs, full description of the curriculum. The curriculum is a case study-based curriculum with over 1,000 successful entrepreneur case studies, including 100+ unicorns, 400+ bootstrap, 400+ venture-funded companies. So you'll learn a lot from these case studies. Our methodology is lean, capital-efficient bootstrap startups. The philosophy is bootstrap first, raise money later, or not at all. We're okay if you don't raise money at all. Either way is fine. That's it. Let me go to Sebastian's presentation. Why doesn't this come up? Is it still loading? How big is this presentation that it's taking so long to load? It says sharing Sebastian Hellman's presentation. The file is in Keynote, but that should be fine. No, you can't. Just a second. Folks, anybody else who has questions, you're welcome to start asking your questions while we are dealing with the technicalities of uploading Sebastian's presentation. This kind of very late is this a very large file, Sebastian? What's going on? Why is this such a problem? We do this all the time, even upload presentations at the last minute. Are you on the call? 8 slides in Keynote. That's not too large. I have no idea. In any case, folks, please do not leave it till the last minute to send presentations. That's not the protocol. The protocol is you're supposed to send your pictures and presentations and slides and everything 2 days before the presentation. So it's we do try to accommodate, but this kind of technical problem, there's nothing we can do about. If you cannot upload your presentation, there's nothing we can do about it. So Sebastian, I think you should work with Maureen, send your presentation to Maureen, and we'll take it from there for the next session. We're going to have to move on. I don't want to keep everybody waiting. If you have it in PDF, send it to Maureen so that she can upload the PDF. Go for it. All right, folks, while he's doing that, let me take you through the upcoming programming schedule. On Tuesdays, we do the online rendezvous, and that happens on Tuesday, 8 a.m. Pacific. So July 28th, August 4th, 11th, and 18th are the next 4 sessions. And we will be live on LinkedIn, Facebook, and Twitter. You can catch us on any of those platforms. And what I do normally in the online rendezvous is answer questions. So we did a poll recently, and one of the feedbacks from the poll is people want to hear about startup ideas. It looks like people are looking at a lot of looking for startup ideas right now. So we're doing a series on post-COVID startup ideas. Also on the blog, you can go to the blog and look at startup ideas for the post-COVID world. And I'm doing LinkedIn live sessions on this topic as well. And we cover other questions as well. So that's a Q&A, and the upcoming free roundtables like these are where I would work with you on strategizing on your venture. So those are July 30th, August 6th, 13th, and 20th. So that's Thursday morning, 8 a.m. Pacific. Okay. All right, Sebastian, I think your pitch is on. What is this? All right, well, unmute your line, Sebastian, and come and talk to me. Are you on the phone? You need to dial into the call to be able to talk to me. Kashika Arora, did you get your question answered? Oh boy. All right, I don't want to bore everybody like this. Sebastian, I think you should work with Maureen and figure out your logistics. It doesn't seem like your microphone is working. You're on the audio bridge, but your microphone is not working. So we are going to adjourn at this point. I don't want to keep everybody waiting like this. All right, folks, if you have questions about the 1M program, please contact Irina Patterson, irina@1M1M.com. She'll answer your questions about the program. If you have any other questions, I will take them now. Please feel free to either ask these questions on the public chat, or if you would like to dial in, you're welcome to do that as well. Anybody? Questions? All right, folks. I don't see any questions. We're going to adjourn the session. We will see you either Tuesday at the rendezvous or on Thursday next for the roundtable. Bye. Thank you for coming.